What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig, and we're going to be going over the charts. Some very interesting things are playing out. We're going to take a look at some older charts that I haven't pulled up in a while on the weekly. Also, we're going to take a look at the monthly, daily, and then at the end of the video, we're going to take a look at the 4-hour and take a look at what we need to be watching for. So make sure you stick around for the whole video. Make sure you smash that thumbs up. Make sure you leave your comments and subscribe to the videos if you haven't already. We do these daily updates Monday through Friday, and let's get into it, see what's going on. So the Dow Jones, also share the video if you would. The Dow Jones, as you guys know, I pointed out this lower high in the price action, higher high in the RSI. You can see that's hidden bearish divergence, but there is always still a possibility we come up and retest this blue trend line on the top. If we do, we'll probably get a rally to the upside. As you guys know, this bearish divergence, hidden bearish divergence, which is a continuation of the trend is down. As you guys know, that'll be broken at 33.2, and if that happens, we look for the 34. Now, what happens if we hit the 34? I think we get a massive rejection if that was to happen. Of course, that doesn't have to happen, but either way, even up here, if we made a high here at the 34, if you look at this high, that would still be a higher high. That would just be a bigger hidden bearish divergence. So either way, I'm still bearish on traditional markets. As you guys know, my targets are around the 24 to 25,000 point range. Although I do think it'll go much lower than that if I'm correct about what's going on. We'll talk about that as it happens. But as you guys know, we like to track the market, see what's going on. Anybody that's just watching just Bitcoin or whatever, they're missing the whole picture. As you guys know, we also keep a close eye on the DXY. The DXY is back above our major resistance. Looking pretty damn bullish here. We have to get above the 21 EMA at the 105.80. The major resistance is going to be around the 106 range, which is a 200 EMA. And then we had the 55 EMA up here at 106.31. As you guys know, I've been bullish and remain bullish on this chart. The DXY, we've been bullish for about 2 years. Everyone called me crazy. A lot of people are talking about the parabola or being broken. I showed you this yesterday, and look at that. We came down and tagged it almost perfectly. Now, if we are to break below this, I told you then I would start to look for a much bigger correction in the DXY, which could lead to a pump in Bitcoin. But when would that happen? We'll take a look. All these times, all these time frames, all these different charts, everything plays out and kind of mixes into one big picture, which we're going to be taking a look at. But we did get our bounce here. It is looking bullish on the DXY again. Now, this was our monthly resistance, which we got rejected at almost perfectly to the T. We've been watching this 55 EMA level for over a month, and we did get rejected. We are coming back down now, but the one thing that is kind of questionable that we may get some more upside is that we broke above this trend line. Let's see where this monthly closes. I think we'll get back below this just being another fake out. We'll talk about that. Now, this is all the way from back in 2010 here. July of 2010 is what this chart goes by. But as you guys can see, I've talked about this. Everybody talks about this was a bull cycle. This was a bear cycle. This was a bull cycle. This was a bear cycle. Now, if you guys know, Bitcoin was created around 2009, and the traditional markets have been in a bull run since 2009, right after the 2008 crash. So Bitcoin has never seen a traditional bear market. So thinking of it in a big picture like that, what I'm looking at is this possibly just being one big bull run right here for and it being finished. And now we go in our first real bear market if the traditional markets are going in the bear market like I believe them to be doing. So you can see the Elliott wave count. We have wave 1 here. There's 1, 2, 3, 4, 5 waves in wave 1. And then we had a correction, ABC correction. Then we had wave 3, which ended in 17. That was a 17 bull run. That had 5 waves in it also. And then we had another correction, ABC. This one was more of a descending triangle correction. Nevertheless, just another small correction and one big bull run. And then, of course, we had the 2021 bull run and we topped out. As you can see, the top of each one of these was right around November, December. Now, if like people believe it to be in a 4-year cycle because of the halving, I've told you, I think all markets are in a 4-year cycle. It's on an election cycle. So I don't believe in the halving theory. For one, they make it sound like each halving that it's harder to get Bitcoin. It is not. There is still more Bitcoin produced every day. It's just half the amount per day than before in the first halving or the prior halving. So anyways, look at this is one big wave one. And are we seeing wave two now? That is the question. That's what we're looking at. But if we are in the 4-year cycle, that would still say we do not bottom till the end of this year, which goes along with my false bottom theory that I think we'll get in between the 7,000 or 8,000 the end of this year. Get a little rally off of that, maybe even get back up towards the 20,000 after that before crashing back down in 2023, which I've been saying I think that's when the true bottom will be, if I'm correct. And that would be somewhere the $3,000 to $4,000 range, somewhere in there. I have showed the bubble pop pattern. If you guys haven't seen it, go to my YouTube page and you'll see a video titled, I think it was 2 weeks ago, How Bubbles Pop. A lot of good info there, shows you. I know a lot of people are saying you can't compare Amazon to Bitcoin. You can't compare. Yes, you can. A market is a market. Why do you think triangles in small time frames usually play out? Why do you think formations play out in charts? Because they are a market, and that is, you know, people think it's based on news or whatnot. I truly believe everything is baked into the charts. You can see bad news before it comes. You can see good news before it comes. I tweeted yesterday. If you don't follow me on Twitter, make sure you give me a follow. It's at CryptoSavvy1. But I tweeted yesterday. It looks like it by the charts, there's some pretty bad news coming. So we'll see if that comes to fruition. But as you can see, too, I have this indicator here, right? This is the RSI support or supply and demand. And as you can see, the top of wave one, we had the supply and demand structure. Top of wave three, supply and demand structure. And each one is getting tighter and tighter. And then we had the wave five supply and demand structure. If I'm correct, this was one big wave one, and we are looking for a massive correction to the downside. Now, this is another chart. This is the weekly. I've drawn this in here. Actually, let's put it on the 4-day. That's what I drew it in here on. So if we're looking at this on the 4-day, as you can see, the fib channels in here, all these fib channels have been major support and resistance. And you watch this, I think the last time I showed this was 2 or 3 weeks ago, but we were looking for a rejection here, which we got. You can see on this trend line here. So if we get back above this 20, where is that? 25,000 range and get support up here, then you can start to look bullish. It may hang out here for a while. And if we were to get a big rally, that's a huge if, we would obviously have to get above this 25,500 range, get support on the 4-day chart, and then the massive bull run could bring us to that 48 that people are talking about. But until we break and hold above that 25.5, I don't think that's going to happen. I think we're going to continue getting rejected here. And as you can see, our next fib level down here, depending on if, when, and where we hit it, if we were to come straight down in the next few days, which is possible, but I think it's unlikely. But if we were to do that, would be somewhere around the 11,200 range. If we were to slowly, gradually come down, and let's say November we hit, that would be around 13,000. And then once we break below this, that should become resistance. If that becomes resistance, then we could come all the way down to my levels in 2023 of $3,000 to $5,000 range. Now let's take a look at another chart. So this is the weekly. Again, we'll go into the smaller time frame, so stick around. I'm trying to pack as much info in here as I can. If you guys enjoy these types where I try to explain a little bit deeper and still try to keep the videos a little short, make sure you smash that thumbs up, leave your comments, let me know what you think. But as you guys know, right here, we had this rising channel breakdown measured move, which we nailed it at this 22, or I'm sorry, this one was around the 25.7, 25.8 range. And then we just made another bear flag. Let me get in here. Let me get that out of the way. We made another bear flag. And if we take the flagpole, measured move down, gets us down to our target, which we called also around the 17.5. And then if we look at what's forming here, looks like another bear flag on the weekly, guys. This is the weekly chart. These take time to play out. So if we were to break down this week past the 19.6, the measured move of this would be 7,600. But we could also look at it as a rising, just like we did here. Once we broke here, we came down, got a bounce first, kind of lingered in this area for a week or so, and then came down. May see the same thing. We come down, get that 14,000. Everybody gets bullish again, come back up, maybe test the 2022 range, and then come down, ultimately break this 14,000 range and head down to our bottom. Now, the 7,600, like I've said, I think this will be towards the end of the year. And if it does play out towards the end of the year like that, obviously this is going to take time. So I do think that'll probably be the false bottom, and we'll take a look at that in the next chart. Let's take a look. So as you can see, the .com bubble right here, I made a video on December 2nd. If you go to my YouTube page, it's playing. I was the first one to start talking about this, and now everybody's talking about it, but they only talk about it when it dumps. When it rises, people quit talking about it, right? If you look at where I have marked here, it looks like this is where we are. We got rejected at the ADMA here. That was in July. Yeah, that was in July of 2000, right? And I've showed you all these tops and all these bottoms line up with almost identically, even with the month, right? So where we at right here, that was our July top getting rejected at the 8 EMA. Now, what happened over here? Then we came down, we made a newer low, right? So if we do that here, that will get us that 14 to 15,000, probably this month or next month. And then still could get, if it plays out like this, then we get one more rally back up to that 28,000 range. That's when we could possibly be going to 28,000. We've been talking about that as a possible target. If that's the case, that's when I would see it coming 28 to 30,000, probably in the next, when was that? September. So this month be bearish, and then maybe get that rally next month or the following month, get that level, and then come up. That's what I'm looking at. But if we do break down further than that, then we'll talk about that when it happens. But let me zoom in here just so you guys can see that. Can you see right there and right here? This is looking like that's where we're at. So let me show you one more thing. As you guys know, this, I believe, was the false bottom, came up for a rally, and then continue back down. You can see this trend line on the RSI here. When we broke, that was the end of this. And I know people say 5 waves down can't be a correction, right? Corrections have to be 3 waves, blah, blah, blah. But this is a bubble pop pattern. And I've showed you in prior videos, like I said, check out the bubble pop. I show you in Sony, Nintendo, the same type of thing. This is a bubble pop pattern. If you look at the market cheat sheet, same thing. It'll show you down here. The false bottom, one more rally, and then continue down. So once we broke this trend line, everyone got super bullish, right? Going to new all-time highs, that was it, end of the bear market, and then it came down and retested that trend line. Now let's look at what's going on here. I drew this in here, right? We could see the same thing. Once we hit our low here, that $7,000 to $8,000 range, sometime in the end of this year, then I think we get this bounce up. And see the timing on this, guys. There's going to be a lot of bounces in here where a lot of people start getting super bullish, right? So anyways, I think we're going to get that bottom sometime the end of this year, the 7,000 to 8,000. Then we'll probably get a rally up to, 12,000, maybe 20,000. Who knows? We will be tracking it, so make sure you're subscribed. But if we get back up to this range, come back down, retest the trend line, this will be true bottom. And this is what I'm waiting for. If this plays out, there's no guarantees this is what's going to play out. But so far, since I made this chart and this video since December 2nd of 21, it's been playing out almost identically, guys. It does look like a bubble pop pattern to me. So, all right, the daily, and then we'll get into the 4-hour smaller time frames. As you guys know, we called these waves all the way down. I thought this one would go a little bit lower, but I did say, if you watch my videos from back then, I said the middle of June, look for a bull rally that will get everyone bullish and calling 100K again. That's exactly what happened, right? Now, let me show you how I got this target here, that 24.3 range, which we hit. It again, see how these targets hit? When I made that one, was sometime in November of 21 when I started calling the 24.3 to 24.5 range. All that is this, looking at this as a rising wedge, right? So you put the breaking point right here, the widest point of the wedge, you measure that, bring it down, and that's what you get. And that's why I said I think this is going to remain huge resistance until we start getting above that 24.5, opening and closing dailies above it. There's no reason to be bullish. If we do start doing that, then you can look for a retest of the 200 EMA here, which we'll talk about in the smaller time frames also. But as you can see, I drew this in a few weeks ago. We could see something like this. I'm still looking at that. If you look back a few days ago, I think it was Saturday, I posted a tweet talking about this could be a great short opportunity. That was at about 24.5. So far, it does seem to be playing out beautifully. If you did take that trade, put your stops in profit, and now you can't lose. So anyways, now let's take a look at these next targets. So if we take a look from the break of this trend where I have the blue line, right? And we look at this as a bear flag, this being the flag pull. We bring this down to the breakout over here. That could get us that $77,000 to $8,000 range, $7,600, somewhere in there. So I do think eventually we are going to see this target. Could it take till the end of the year? Definitely a possibility. Now, is there lower targets? There is. If we take the top of this, right? Now, this is a little less likely, but you got to take everything into consideration, right? As long as we're below these levels, there's no reason to be talking about super bullish targets, in my opinion. If we break these levels, then we start talking about, you know, bullish targets. But as of right now in the macro, right now, it is still all remaining bearish. Now, there is, if we look at the RSI here on the daily, we could come up and get one more test to this, which would be our resistance level on the RSI right here, right? We did show some, I'll show this on the daily. We did show hidden bearish divergence here. We made actually bearish divergence. We made higher highs in the price action, lower highs in the RSI. That is bearish divergence, which we're getting now. So will this play out all the way back down to the 17.5? That is a possibility. But again, we could get that, get all the way back down to, you know, somewhere in these levels, then get a bounce back up to that 28 and retest this trend line. So that's something to watch for. If we do get that bounce, watch this area, and for a rejection, that would be another great short opportunity if we don't just continue down from here. Okay, so let's take a look at other stuff here. Oh, that's why I wanted to show you. So the super bearish target, which is a possibility. I'm not saying it's going to happen. I'm just saying this measured move from this top to this bottom as a bear flag. Which one is that? Yeah, right here. That would get us all the way down to approximately $1,200 range. Can it happen? It can. Will it? Who knows? I'm not going to say it won't, but it is a possibility, right? If you guys are interested in trading, check out Prime XBT, my favorite platform. They don't trade against you. You can trade, you know, multiple trades at the same time. They don't clump them all together. You can trade Forex, gold, silver, oil, S&P, Dow Jones, everything, all from one exchange. So if you guys want to check that out, I have a link down below. I also have a tutorial on it on my YouTube page. You can check it out. Use my promo code SAVVY50. That'll get you up to $7,000 bonus. SAVVY25 will get you 25% off your fees. All right, so let's take a look at what's going on now. Let's zoom in here. This is, again, another 4-hour chart. And then after this, we're going to take a look at a 4-hour chart showing the areas to watch for a pump if we are to get a pump. So let's take a look at our targets here. We talked about this yesterday. If we are to come down to these levels, it's going to be around the 22.1 to look for a bounce and then another attempt at possibly going up to attempt to break these highs. As of right now, we look like we're most likely, if we do get a little pump, I don't think we're going to break this high. I think we're going to come down and at least retest this trend line, depending on where this is. Now draw this trend line in your chart, right? On the 4-hour, depending on when it hits here. If it hits here around the 22.1, that's probably going to be our bounce area. And then we may, you got to keep an eye on the RSI because this could just bounce back to maybe 23,000 if that was to happen. But once we break the center of this, then we're probably headed down to retest the bottom of this somewhere in the 20,100 to 20,500 range. But at any time, a break of this, coming back, testing it for resistance, we go down to our next targets, right? So let's take a look at this chart. All right, same thing here, guys. If we take a measured move from the break of the trend, looking at this as a flagpole, this as a bear flag, that gets us down to, let's put a price label on there, about 8,100. So again, 7,000 to 8,000 is what I'm looking for, but I would expect a bounce here, right? Let's zoom in a little bit. Let me get that RSI out of there. And let's take a look at what's going on with the EMAs. You guys know I love my EMAs. The EMAs are turning bearish here. If these cross through here, remember, if the 8, the 13, and the 21, which is the red, white, and blue one here, cross the 55, and the next candle after they all cross, open and closes below the AEMA, that is bearish. That is a sell signal on the 4-hour. I've used to talk about that all the time. I don't talk about it as much. A lot of people don't understand it. But like I said, I'm trying to go into a little more detail in these videos for you guys. So let's see what happens here. Do we get a bounce up? One more attempt to break this high or not? If we do, how high could it go? So if we look at this trend line as a rising, broadening wedge, if we come up and retest this trend line and break that 25.5, then I think it's a good possibility we could be heading towards that 28. I don't think that's going to happen now, but anything's possible. It could get up here and break that. That would be the third touch of the top up here with only touching the bottom twice. So in my theory, most likely we're going to come up. I don't think we're going to break this. I think we're going to come back down to test these levels and then come down to our next targets down in these areas. But I do expect a bounce between 14 and 15 to possibly come back up and retest this. Depending on how long, this could take a long time, come back up and retest 22, who knows. But again, that's why I make daily updates, guys, to keep you updated on what's going on. As of right now, let's look at the major support on the 4-hour is around 22.5, which is the 200 EMA. If we break below that, come back up, it turns into resistance, then we're most likely headed back down to these levels. Thanks again for watching, guys. Don't forget, smash those likes. Leave your comments down below. Let me know what you think of the video. Let me know if you like these longer, more detailed ones, or you like quick, short ones. I'm curious to know what you guys think. Thanks a lot for watching. Don't forget, subscribe if you haven't already, and please smash those thumbs ups. Take it easy, guys.